we go. We're going to do the review for the first quiz, huh? And this one says quiz 1 and 2. I was doing 2 chapters instead of 1. Okay. This is sort of a quiz on the first chapter, but you already realize it's really on the first 3, isn't it? Because it kind of has to be. You don't get enough out of any one of these first 3 chapters, really. Have much to work with. So it's kind of all 3, really. But at a fairly basic level, I hope. I hope you like this first question. Provide the complete accounting equation. How would you do that? What do I mean by the complete accounting equation? Look at the balance sheet, look at the income statement. It even says indicate which ones are in the balance sheet, which one in the income statement. So if you didn't realize it, you would then, wouldn't you? And then it says indicate how to increase or decrease, whatever. I could say one or the other or both. What's that? Debits and credits, right? I wouldn't even have to say debit and credit. Okay? So how would you set this up? What would you do right away? Maybe write it down. Okay? And you can abbreviate. For me, you can abbreviate when you get into other professors' classes, ask them, right? Those of you who are going to end up doing more accounting classes. All of you are going to do accounting 1 and 2 of that. But if you get into 211, that's with me, so you can abbreviate there too. 212, Deck doesn't like you to abbreviate, get the idea. Okay, so ask. Always ask in classes, I guess. With me, you can abbreviate as long as I can tell your abbreviation from something else. Don't use INV for inventory and investment on the same quiz, please. With INV, I can tell which one it is, right? Get the idea? So, use your head a little bit. Give me enough abbreviation so I can tell what it is. Okay? All right, anyway, I think what I would do is I would just do the balance sheet. Assets equal liabilities plus equity. I bet you I'm just freebie giving you points on this quiz, huh? Now, a little bit. What was it, 3 points there? Okay, in our quizzes, they're 20 points, so even less probably, 2 or something, but still, take them. And then revenues, less expenses. How do you like that? If you wrote that down, you got the first part done. Which ones are on the balance sheet? Oh, come on. That's the balance sheet, isn't it? Nobody sitting out there doesn't know that, right? This is the income statement. If you are sitting out there and you don't know this yet, you are in big trouble. Right? You're in big trouble. You haven't even opened the book yet, probably, if you don't know that. Right? You certainly don't know what's in the book. Opening it does you very little good if you don't actually read it and know what's in. Okay, so read carefully, pay attention. Okay, anyway, and then it says how to increase each one of them. Let's do increase and decrease both. Assets are on which side?
Left.
Synonym for left. Debit. Okay, so debit means left. And obviously then what means right? Credit. We got it. Okay, here we go. So quit flashing in your face. Okay. Debit means left, credit means right, huh? Okay. Assets are on which side?
Left.
Okay, how do you increase them?
Debit.
That's why. Increase with a debit, reduce with a credit. Liabilities and equity are both on the right-hand side. What do you do? Increase with a credit. How do you reduce it, guys? Debit. Okay? Now, revenues are a subset of equity, aren't they? During the year, I am increasing my equity. How? By earning positive net income or reducing it by losing money. Right, guys? Do you think you're wealthier if you make money? Of course. Do you think you're poorer if you lose money? Of course. What's the other way you can get more equity? The owners invest more. Right? By the way, you can have less equity by paying it out to the owners too, right? So how much the Ducks going to win by tonight? What's your prediction? 10? I think it might be ugly. I mean, it's in way too much. Everybody's been trying to say how good Ohio State is because after all, they're in the championship game. I don't know. Yeah, we'll see. They've won their games, so. And besides that, what does Oregon always do in big games? No. What do they do in the really big games?
Blow it.
Blow it, choke. Yeah, so, it's probably going to be a really big win one way or the other. Yeah. They don't have to choke it out. That's more important than you guys getting ready for the quiz. Come on. I can't believe I'm here. I'm so excited. No, I'm kidding. Not excited about the game. I'm not playing or anything, and nobody's paying me, so, okay. Anyway, I'll watch this one. You guys don't have time to study. Right? Yeah. Okay. So, revenues and expenses are subject to equity, right, guys? Income statements is a subset. Keeping track of your increase in equity for your current period or decrease. Good. So, if revenues are your sales which increase your equity, what must they be? Credits. Absolutely. That's it. Not because they're on the right. They're not on the right. Equity's on the right. Okay? There's the subset equity. So you increase it with credits. What if you put too much in it and you want to fix it? Decrease it with a debit. Absolutely. Why? Because they're part of equity. Equities increase with a credit, reduce with a debit, right? What do expenses do to your equity? Lower it. How would you lower your equity? With a debit, because it's on the right-hand side. Debits reduce the right-hand side. Right? It's the opposite of credits. Okay. All right. So expenses have to be debits. Another reason they have to be debits is they've got to be the opposite of the revenues, don't they? How many times have I said this already? We have met 3 times. 4 with a speaker today. I didn't say it today. Is that right? Is that our 4th meeting or our no? That was our 3rd meeting. Oh, we only met 2 times. I said it twice. No, I thought I said it 8 times between those 2 classes. And I'm saying it again, aren't I? And I'm going to say it next time too. Getting the idea here? This is important. It's the language. Okay, you got to know this stuff. Okay, how do you reduce expenses? Okay. Now I want to point out something. That's all the answers. By the way, what's net income? Debit or credit? Credit. So you got 3 points if we're doing that quiz. Net loss would be a what? Debit. And why? Because the expenses, which are debits, exceed the revenues, which are credits. That's it. Okay? And if we're going over into these 2 equity accounts that we have here, contributed capital, if I'm increasing contributed capital, would I debit or credit it? Credited, of course. So if the owners contributed cash to the business, what would they do? Debit what? Cash, which is a asset. You'd have more in the company, so what would you do to it? How do you increase assets? Debit. Okay? And what would you credit? Now we issue common stock to the owners. Capital stock is common stock. What would you credit, you guys? How about an account named common stock, which is an equity account? And what do credits do to equities, you guys? Increase. So yeah, these credits over here increase it, don't they? Right? Everybody good? If I retired some of the stock, guess what I'd do to it? You'd have less, you'd debit it. Yeah, big deal. Don't fight this. Don't fight it. Just internalize it. Accept it. What's your name? What is it? Dakota. Dakota? Really? That's cool. Okay, anyway. He's Dakota. I'd have never guessed that in 100 million years. Why is it Dakota? Because your parents named you. Why does debit mean left? Just a definition, okay? Why are credits on the right? Because they have to be, because the debits are on the left, and you don't have to remember that. Everybody good with this? And all the debits and credits within this, you know? Okay, does debit mean good? No. Sometimes. It's a better answer than no. Sometimes. When does debit mean good, everybody? How about increasing your assets? Is that good? Yes. How about reducing your liabilities? Is that good? Yes. How about reducing your wealth, your equity? No, that's bad. How about reducing your revenues? No, that's bad. How about increasing your expenses? No, that's bad. You'd be right 40% of the time. Getting the idea? Same with the credit side, right? If you thought it was good or bad. And people are stuck on that. They want it to be good or bad. Or they want it to be plus or minus. Let's try that one. Is debit plus? Yes, for assets. Is debit plus for liabilities or equity? No, of course not. It's minus. Is debit plus for revenues? No, it's minus. Is debit plus for expense? Yes. It works 40% of the time then. You'll be right either 40 or 60% of the time, depending on what you believe. And you will be screwed. Everybody agree with that? Imagine trying to do this if you think it's plus or minus or good or bad. What does debit mean? Left. That's all it means. What does, put it on the left side. What does credit mean? Right. Put it on the right side. You got it made then. Have I convinced all of you folks? I hope so. By the way, here's the cool thing. You guys are here. You're a little stressed about already having a quiz. You're a little stressed because you have Richardson. That's wise. And just a god-awful teacher and have high expectations. It's really a horrible combination. Okay, but here's the deal, guys. You're doing exactly what you need to do. Don't stop. Right? You don't have to give me all your time, just most of it. It'll be fine. Okay? Now, just make sure you spend the time you need to get it. Right? Is this a good use of your time? Yes. When you're in intermediate accounting, you might not want to do this if you take intermediate accounting. Because you know what? You might learn more doing it yourself instead of me telling you. But for now, probably this works for you. Right? It certainly is a confidence builder. And as we go along, if you don't need this, okay, I don't care. Right? I don't care how you learn it. I care you know it when we're done. Okay, that's all I want. That's all I want. That's the stuff we're doing here. Okay, so, and really that ought to be all you want too. I heard Steve today tell you how long it's been since he worried about grades, money, promotions. He doesn't worry about that crap, does he? What does he do? Deliver, deliver, deliver. It just takes care of itself. His last promotion, right? He's a real big shot. Just how big a company is in a young this, right? He's quite a high level, obviously, but money does. For appliance part, right? He's pretty high level, right? Not the key as a whole, but appliance parts of the tank. You know, people know who he is over there, right? He's 28 years old. But on his last promotion, what happened? They tell you each of the classes out, I don't know, I can at least one or two of them. What's the deal? They asked him if he'd be willing to do it. Would you please, you know, take this off? You think? No, that's where you want to be, you guys. So, when I add up the points at the end, I hope it's just how catcher A is done. Okay, retained earnings, gang. What happens with retained earnings? What increases retained earnings? Credits, of course. It's equity, right? It's another equity account. So I have contributed capital and I have retained earnings, don't I? What increases retained earnings? Credits, of course, which is net income. Because it's a credit. You bet. The net income's going to come in here. What if I have a net loss? It's a debit. It goes on the left side, right? Okay, need to know that. Of course it's true, right? It's just true. Okay, it's how you increase and decrease equity accounts. Net incomes increase equity. Named retained earnings, cleverly, right? Okay. What if there's a dividend you pay out to the owners? That's taking some of the net income and paying it to the owners. What will happen? More or less wealth in the company if you pay out some of it to the owners. Less. What would you do? Reduce retained earnings with a debit. You got it. Dividends are going to go there. If you want, you can use an account called a dividends account. It's a temporary equity account, just like revenue or expense. But it's not an expense. The owner is taking money out of the business. It's not an expense. The business is a distribution of profits, right? If you put $100 into a savings account that earns 5% interest, what do you have at the end of the year in the account? $105, right? You got $100 and you earn $5. You have $105. How much did you earn? $5. What if you take the 5 out? There's only 100 there. Would you say you made nothing? Or would you say you made $5 and then took 5 out? You'd say you made 5 and took 5 out. Is a dividend an expense? Of course not. It's not a cost eating the revenues. It's a distribution of the income to the owners, huh? Common sense. Now, can you guys think as fast as I can talk? The answer is you can think much faster than I can talk. You just haven't trained yourself. You're used to teachers talking very, very slow. I can remember really early in my life thinking, for God's sakes, would you just say it and we could go home? There's too much to cover for us to go slow. Plus, I say everything about 20 or 30 times. You only have to hear it once, really hear it. Okay? Can you listen this fast? Can you think this fast? Can you learn this fast? The answer is, of course you can. Want Steve's salad or anywhere near it? Would you like a quarter of it? It's pretty good. It's probably where I'm at. Right? Okay? Yeah. You want your starting salary for the rest of your career? Around there? About it. Okay? So work, you guys. Come on. And that's thinking fast. Processing things. Doing things. Believing it. Every single person sitting in this room is smart. All of you are. I think everybody on earth is pretty smart, really. Unless they're born with some sort of a disability, right? Just whether you use it or not, guys. Whether you use it. You know all the studies on how little of our brains we use and all that stuff, right? Boy, is that true in my case. Well, I hope it's true. Otherwise, I don't have much of a brain. Okay, let's do number 2. Any questions on the first thing? And I doubt it. But I kind of set you up to do the rest of it, you guys. We're going to use the same stuff. The same stuff. Using the accounting equation, in fact, I even gave that hint. Fill in the missing amounts in each independent case. As soon as the first year of operations, the owners contributed 35. So they've got 35,000 in which account? Or $35, whatever, I guess it's thousands. In contributed capital, yeah, which is probably common stock or something. So it's 2 different companies, DEF and Muni, I guess. Okay, anyway, we got revenues, liabilities, assets, net income or loss, retained earnings, expenses, dividend. Is there something that bothers you about these things here? Is that in the shape of a balance sheet and an income statement? Does that fit the model we just built? No. What would be a really nice thing to do for yourself? Make it fit. And here's something I'm going to tell you. Listen to this really carefully. I'm going to say it over and over if you want to hear it. This is good for analytical decision making. Decision making in general. Write down everything you know and solve for what you don't know. Don't start solving until you do that, or you'll just flail around. Don't do each one of these. Don't solve for A and then solve for B and then solve for C. Let's do them all at once. So we only have to compute it once instead of 3 times. Okay? It'll save you an amazing amount of time, right? And when things get complex, boy, is that important. This isn't complex yet. So how would you like to set this up, you guys? What do you think we ought to make it look like? What?
Equals liabilities plus stuff and putting
Yeah.
or just putting.
Now here I gave you the clue that you should do this. You think on a test I'll say that? Nah, my father, you know it, right? You know you ought to get yourself organized. Okay, let's write down everything we know. What do we know, everybody?
Assets.
Liabilities,
Assets is 150.
100.
Liabilities are 100. What else do you know?
Contributed capital is 35.
Contributed capital is one of the types of equity. You got to know that. If you don't, you got a real problem. Contributed capital is how much? 35? Right? I bet there's another type of equity. What is it? Retained earnings. Okay. There are a number of contributed capital accounts, and there could be more than one retained earnings account too, but there really aren't very many in total. 5, 6 accounts in a typical company, right? Even GE, 5 or 6. Okay, there's lots of assets and liability accounts. So. All right, what else do we know? Anything?
Dividend.
Okay, what does the dividend come out?
10.
10 out of retained earnings. Is it a debit or credit?
Debit.
Debit. It's reducing the equity account. You got to know that. So am I asking you to know a lot already? Yeah. Totally unrealistic expectation. Luckily, these quizzes don't determine your grade. Right? This is learning. This is just for learning. Okay, but you're learning it, aren't you? You know what? It's going to be on a quiz, so what are all you people doing? Trying to know it. You're working really hard to know it. Every day you came to class, that's exactly what you did, right? No, you didn't. I can just look at you people. All of you sat there, leaned back like this, out of it. I wish I was anywhere on earth but here. Now you're thrilled to be here, even though it's on your time. It's not even class. Like class isn't your time or something. Of course it is. This is your time too, but now you're really gung-ho going for it. Do it all the time, okay? Come in and spend 50 minutes 3 times a week and learn everything you possibly can, and then forget about the review sessions. You already know it. If you've studied, right, read the material, and you know what you'll do anyway. Like, geez, I'll get an A- instead of a B+. I go to the review session, and you're all 3, right? So you'll come and get it, right? You come and get the extra points for showing up. Okay, fine. You're going to be successful people out there in the business community. That's all right. I don't mind, even though I'm poor. You guys will send me some money, right, for my retirement? I'm sure Steve's going to do that, all right? He's going to send me my royalties for helping him get his education. He mentioned the B's I gave him, right?
Yeah.
I didn't realize I was the only one who gave him any B's. Nobody else grade hard around this place. Kind of a slacker kid, but okay, anyway. What do we do now? That's all I got, right? Can you solve anything?
Yeah, revenue. Revenue 230.
Oh, I didn't write it down. Okay, sorry. That would never work. Okay, is that it?
Yes.
Okay, we got them all. I would have done them in order because otherwise I forget. Right? I'd have gone across in order. They're all down there now? Can you solve for anything? Can you solve for expense or net income? No, there's 2 unknowns. Can you add up contributed capital and retained earnings and get your total equity? Of course not. Right? Because you don't know the ending retained earnings. What can I write? What can I figure out?
Your equity.
Yeah, what's equity at the end?
50.
50. This is 50. Is there anybody in the room that can't figure out that 150 less 100 is 50? I doubt it. I bet you can do that. Okay? That's funny. Come on. Okay, that's the ending though, right? Can anybody tell me what the beginning balance was in every single account, seeing as they just started these businesses? It's their first year of operations. What was the beginning balance in every single account? 0. So what's beginning retained earnings, everybody? 0. That's going to be really handy, isn't it? Can you tell me what ending retained earnings is? Seeing as total equity is 50, Contributed capital is how much? Gee, I think 50 less 35 must be what retained earnings is. What do you think? Don't you think contributed capital plus retained earnings is equity? I do. What do you think, guys? What's ending retained earnings? It's 15. Isn't that right? 50 less 35 is 15. 50 less 35 is 15. Is that true? It's got to be. These two have to add up. Contributed capital and retained earnings has to add up to your total equity, because that's all there is. Your wealth is all owners contributed plus your retained earnings, isn't it? Yeah. This is easy, isn't it? Now what? Can I solve anything else now? I can see something else I can solve. What is it? I know the beginning retained earnings is 0, right? I know the ending now is 15. I figured it out. I know the dividends that came out is 10. Somebody says he thinks we can get net income. How much is net income? And it's a credit, of course. It increases retained earnings. You started with nothing. You paid out 10, and you still have 15 left. Can anybody tell me how much we earned? Careful. We started with nothing. We took 10 out. We still have 15 left. How much came in? How much did we earn? 25. Net income's got to be 25, doesn't it? Ah. So if net income is 25 and the retained earnings, what do you bet it is on the income statement? Seeing as that's where you get it to the retained earnings, right? Where you take it from to put it in retained earnings. So I bet you this is 25. Ah, now I got it made. Is revenue a debit or a credit? It's a credit. So if you want, you can put brackets around it if that helps you. Brackets don't mean minus, they mean credit, okay? You like that? Okay, so that's a credit. We can put brackets around liabilities and equity if we want to. Can or not, but, you know, if it's useful, do it. Net income is a credit, isn't it? That'll help you keep it straight. The expenses is a debit. So are expenses more or less than revenues? If you have a positive profit, what do you think? They're less. How much less? 25, so it's 205. Do we have all the numbers we need to answer those questions? Notice I didn't even try to answer any questions yet. What for? Right? It said to use the accounting equation, and it's obvious what it's asking for. Okay? What do you think the net income or net loss is, everybody? 25? Income. If it was loss, put brackets around it. That's what it asked for, right? What's ending retained earnings? 15. Everybody agree with that? What's expenses? 205. Got it. 1.5 on a quiz. I don't know. 5 points on a test, maybe. Maybe something like this. This is easy, isn't it? Yeah.
So multiple choice format, would you still give us, so it would be something like giving us all those same numbers?
I'd have the A, B, C, and I'd give you 4 possible answers.
Yeah.
What I do, because I wrote it myself, is I give you 4 possible answers and then one that says it's not there. You know why I do that? Because I screw things up all the time, and it protects me. So don't panic if you don't find one of the 4 answers is the right answer. What do you take? You look at it and say, Rich, he can't do the math. Can't work his own problems. And you take the one that says none of the above. Got it? I don't like none of the above as an answer, but it just protects me in case I screw up, right? Which happens consistently. You can tell already, right? You've listened to me talk for a while. I was this bad when I was 29 and I started teaching them. It's not the Alzheimer's, right? I talked to my dad last night. Had so much fun. He still knows who I am, I think. Yeah. My brother explains to him who I am. He lives nearby. So before we talk, hilarious. So life is either funny or sad, right, guys? I choose funny. Right? Why not? He didn't even know Oregon was playing, but I'm sure he's going to watch the game tonight. But he won't remember it. It'll be all right. So then you can watch it again. That'd be kind of cool. Okay. Anyway, Muni. Let's do it. You want to do the other one? You guys do it. Go. Do it. Everybody. You got paper? You got pencil? Have you done it yet? Do it real quick. Boom, boom, boom. This should take about 30 seconds if I'm not talking about it. Bet you can do it in a minute. Did you do it? All right. Of course. Yeah, go ahead and work. Who doesn't have a copy of the text? The quiz. That'll never happen again. I should have told you that. Is everybody sitting next to somebody who has one if they don't have one? Are we all okay with that? Yeah. You have somebody you can look on? You got to grab all those pencils. Go ahead and work it real quick. Good should be. Just falling out for you? Yeah? Yes. Really working. When I show you how to do something, or anybody shows you how to do something, you get an opportunity to do it yourself. Or if they don't give you an opportunity right after class, the first chance you get, do it. Okay? Do it. Don't. My intermediate students do this to me all the time. They'll sit there, I'll explain something. They understand. Then they won't work it when I ask them to work it. And then the next time I see them, they don't know what the hell they're doing. Don't do that to yourself, okay? Work it. Get all those answers. Have them fall out for you. And then we're going to work it, and you can see if you did it right, huh? You know what you're doing. Fill in the pieces.
Yeah. Actually, the difference in grants usually line showing the drone is also there. So both of them are like,
Those are dangerous friends to have.
yeah. They do, well,
Smart
Sean
asses.
does nothing. He gets good grades.
Yeah. Gonna go to work if I can.
Yeah. That'd be great.
But he does nothing. He'll only do that once. Just figure it out. Everybody got answers? Is that a yes? How many of you have an answer for everything? Oh, come on, raise your hand higher. How many have an answer for everything? Well, then hurry up. Let's go. I don't want to stay till 6, 7. Get through 15-minute quiz. Come on. And my wife's fault was she's working on it. She wants to buy a new one because it broke. It's not dependable anymore. It broke once. She has to have a new buy. Good to buy her a good buy because it's an unlimited rate of allergies until now. Plus the battery. $1,500. Two car payments. Come on. Yeah. Are you getting answers? Didn't I just show you how to do this? Okay, this time pay attention then. Okay, what are we going to do? I'm kidding, aren't I? I am kidding. You did pay attention, didn't you? And you can't do it. How can that happen? Okay, what I want for you guys is when you go to work, I want you to go into your boss's office and ask them a question if you don't know what you're doing, and I want you to understand what they explain to you when they explain it the first time. I want you to write it down. I want you to think about it. I want you to internalize it. I want you to make sure you know it. So the next time you go back and ask them a question, it's not the same one. Everybody loves questions. I think it's great getting questions. Obviously, but I like it. I like it. You get the question over and over. It's okay as long as people are trying to get it, right? Okay? But what you want is for you to be the person, you don't know anything when you start working, you learn, right? But as soon as somebody shows you how to do something, you want to know it really well, then you do it a few times, and then you start training other people on how to do that. Does that sound good? And then you get to do something else you don't know how to do, and something else you don't know how to do, and you keep learning and learning. That's the whole idea. You know, Steve's in here and he's talking about these different jobs. They don't have anything to do with each other, do they? Isn't that cool? Totally different things. Now he's traveling all over the world. He was traveling around in the U.S. with the job he had before that, right? So I bet he went to a lot of exciting places selling, what did he do? Service on refrigerators. Okay, anyway. All right. What do you bet you set it up like this? Did you do that? Everybody in the room did this, didn't you? Okay, this time, because I'm slow, let's just go across the page. Liabilities are 180. Is that right? Okay. At the end of the period. I know retained earnings is 100. That reminds me that there's such a thing as contributed capital and retained earnings, and they are two different things. So, okay, and retained earnings at the end is 100, is it? What is it at the beginning, seeing as this is their first year? Nothing. How much was contributed capital in all the cases? 35. Okay, I guess I should put that in there. Okay, and then expenses are 180. Okay, and then I know the dividend is 40. Is that what I know?
Yeah.
Is that everything? Okay, solve for something. I can see two things I can solve right now. You can get net income, can you guys? Sure. If the ending is 100, right? Net income. If the ending is 100 and the dividend is 40, how much is your net income? 140, right? This is 140. Can you give me anything else?
Yeah. Then you revenue.
Yeah, you get your revenue now. Okay, I can still see two things I can solve. I just added one, right? What's net income? Or revenue, I'm sorry. 320. It's got to be 320 because, right? 140 plus 180 is 320, right? 320 less 180 is the 140. Okay. What could we have done anyway to begin with? We could have done equity. What's ending equity? 35, not 100. 135, yeah. Did you say 135? I apologize. 35 contributed capital, 100 retained earnings. This is 135. Can anybody tell me now what must be? So we've solved that one, we've solved that one, we've solved that one. That was good. Okay. And then what's assets, guys? 350. Okay. How many in the room had all this? Why not? When we see each other on Wednesday, will you be able to do this? In your sleep. Ah, this is how you get it, you guys. One problem at a time. I got this one. I got the next one. I got the next one. And I really got it. I don't sort of fuzzy, sort of half-ass know what I'm doing. You know how much people will pay you for going to work and sort of half-ass knowing what you're doing? You can't make hamburgers at McDonald's unless you know how to make hamburgers. You can't go in and say, I sort of know what's in a hamburger, I'd eat one. And think you're going to be the boss. Teaching people how to make burgers. They make hamburgers at McDonald's. Anybody ever worked at a fast food joint? No, you guys never worked in your life, I forgot. Anybody ever had a job? Oh, good. What? Lily, white, fingers doing something.
Oh, yeah, definitely.
Yeah. Never had to really swing a hammer or anything. Anybody have a job where they had to work physically? Physical is work. This is not work. This is moving off, right? That's my brother. He's a cement finisher. Yeah, it's good for you. Everybody ought to get a job where they do something where they get dirty and miserable and hot, all that stuff. Yeah. Probably too late for you people. Be too valuable. Okay, let's do something. Everybody got the idea? Can you answer those questions now to this? Of course. Okay? So work on it until you got it. Okay? And you can have this for Wednesday easy. Now it gets, now it gets really easy. What does credit mean? Right. If I ask for debit, could you? Never. Okay. Let's try number 4. Now things get rough. 3 individuals invested $100,000 each to form Reiner. So how much is total contributed capital? There's 3 of them. Got to read carefully. 300,000. They had total revenues, 2 different years. Total expenses, 2 different years. Cash paid out to stockholders. And what was ending stockholders' equity? What is stockholders' equity composed of? 2 things. Contributed capital and retainers. Yeah. So what I want to know, seeing as they gave me contributed capital separate from retainers, right? I'm going to run into exactly the same idea. Now, I don't know that I need all this stuff, but it doesn't hurt anything to write it down. The balance sheet part. I want to know total equity, don't I? That's what it's asking me for. I know what I'm going after before I start working, okay? Revenues less expenses, yeah, is net income. And we're going to use 2 years, right? So what they call them, year 1 and 2 or something? A and B? So 20A and 20B. I got 2 different years to work with. So this gets a little tougher, okay? Here we go. Yeah, good job, Keith. Put them over there. All right, that's good. Anyway, get out of our way. Okay. Says our revenues are 30,000 in 1 year. Okay. 45 in the other year. You like that? Expenses are 22 and 33. Is there anybody who can't tell me what net income is each year? Do that, can't you? 8 and 12, is that what it is? Everybody agree? Okay. And then it says, what was total stockholders' equity? Shoot, and I know contributed capital is how much, guys? 300. So be careful. If it asks what ending balance is in retained earnings, that's different than the ending balance in total equity, right? It only asks for retained earnings, which I do that sometimes. Only do retained earnings. It asks for total equity at contributed capital. If it only asks for contributed capital, it'd be real easy. It'd be 300, huh? Okay, it's 300 right from the beginning. What is beginning retained earnings going to be when you start the business? 0. Okay. Now, what else do I know about retained earnings? I know the net income comes in each year, right? So the first year's net income comes in. That's 8, isn't it? What else happens the first year? Dividend. How much? 4. So they made out 8, took out 4. What do you think their ending equity is at the end of 20A?
They took out 4.
Whoops. No, I made it 0, didn't I? No, they took out 4. All right, so they earned 8. Said it right, didn't I? They earned 8, took out 4. What do you think the remaining retained earnings is if you earned 8 and took out 4? I think it's 4. What do you think the total equity is at the end of the first year? 304 is the answer. Easy, isn't it? Now be careful. You don't close down retained earnings and start over. You don't make it 0. Do you lose your wealth because you start a new year? I don't think so. We're going to make the revenue expense accounts all 0. We'll talk about that in chapter 3. Get into it really. It's called the closing entry. We make the revenue 0 at the end of the year. We make the expenses 0 at the end of the year to start over again for the new year, so we keep track of it 1 year at a time. Huh? That's the idea. And we take that net income and we add it to retained earnings, or the net loss and subtract it from retained earnings. Okay? So you do that once a year. Okay? But does your retained earnings go away because you start a new year? Let's hope not. I hope my wealth doesn't go away because we start a new year. We're in big trouble if that happens every year. If that were the case, I would accumulate no wealth. I'd just spend it every year. How about you guys? What for, right? It's going to just go away. It doesn't go away every year. It stays there. So I've got 304 at the end of 20A. Well, what happens in 20B? How much is your income? What's your dividend? 6. They keep taking out half. Not a very good strategy. Not much reinvestment. But anyway, what is the ending balance then? That would have made it 16 less 6 is what? 16. 12 plus 4 is 16. They're adding 6. It's 10, right? The ending is 10. Does everybody agree with that? You start with 4, you add 12, and you take out 6. I think it's 10, huh? Everybody see it? So what's your total equity at the end of the second year? 310. Okay. Did you do those two? I think so. Yes, sir.
That's where you got the 6 from.
Okay. They said the dividend was 6. Did they read wrong? Dividends are 6 the second year. Okay? Dividends were 4 the first year. It's taken right out of the problem. A lot of this is just reading carefully. Relax when you're reading this stuff, you guys. Take your time, read, think. Now, can you sit on one of my quizzes or one of my tests at my final and sit there and, gee, I wish I could remember how to do something? No. But can you read? You have to know how to do it. Can you read carefully and work carefully? You bet. Should you check everything 2 or 3 times? No. You're going to be charging people a couple $100 an hour. You don't double check your work. You do it right the first time. Keep moving. Okay? They're not going to pay you twice or 3 times to do it. Do it right. And what happens if you make a mistake? What do you have to have for an A in here? 80%. How often do you make a mistake? 20% of the time. Give me a break and pull that off. Right? What did you do for a B? About 70%. Come on. Did you be right 7 out of 10 times? Got it. Okay. C is about 50%, isn't it? They're right in there somewhere. Right? Can you be right half the time? Can you make it? You're relaxed, you guys. You can do this if you know what you're doing. You know what? A whole bunch of people that aren't here tonight probably, maybe a few who are here, aren't going to pull that off. But it's not going to be because there's not enough time. Why is it going to be? They do not know what they're doing. Can you finesse my quizzes and tests? You have 2 friends who are pretty good students. Did they tell you? Can you finesse this class? No. There's no way in the world. It's impossible. And I do this a long time. Right? All right, so there aren't going to be any questions where I just get, well, yeah, there are. I'm going to ask you what debit means or credit means. I take it back. There's going to be 1 point or half a point this semester that you get for knowing that. So that's it. Into the easy ones. Okay, yeah.
So I know in the past when it's not multiple choice, you've given points for work. There's no
points for work.
Okay.
But I break it down so much, right? So these would be 2 questions, so each question comes with very much. So yeah, it still works.
Well, it doesn't really matter how we work it. Then.
Oh no, I don't care how you work it. Yeah. And what I'd recommend is kind of do it either the way I do it or the author does it. They're sometimes a little different. One or the other, don't make it your own for now. Yeah. And then later, if you can find a shortcut and it works every single time, run the shortcut by the professor. I have people in intermediate all the time say, oh, I did it this way, that's going to work, right? Did it on that time. One of you write one where it won't. So be careful. Yeah. Not that I know the best way or the author knows the best way. There's all kinds of ways. And if you got a shortcut, fantastic. Okay, let's try something else, huh? Everybody good? Are these easy? Sure, after you know how to do them. Are they impossible when you don't know how to do them? Yeah, that's kind of the way life is, right? I don't know. If I had to speak Greek with somebody, it'd be kind of tough. But for somebody who lived in Greece all their life, I don't think they have any trouble. That's the way it is, right? I couldn't communicate. They can. They don't think it's hard. Abraham's Corp. That's where we're at. I think. Aren't we on 5? Reported the following amounts in the first year of operation. So we started at 0. Guess what I'm going to do to you when we get out to about chapter 3? We're going to have opening balances from prior years, right? And we'll add a year to it. Big deal. Okay, but for now, these are all the beginning, first year of operations. So then at the end of the year, they have contributed capital, sales revenue, assets, dividends, liabilities, retained earnings, and total expenses with B. Does this problem look familiar to you? Which one is it exactly like? Number 2. It's the same problem, isn't it? Just with different words. Big deal. What do you want to do? I'm asking you for retained earnings and expenses. Let's write it down. Get yourself organized. You don't have to do it this way. You can do it all in your head if you want. I think it'll take much longer. And you'll be at risk of making mistakes. And if you do it like this, it's almost impossible to mess them up. It wants retained earnings, so didn't it? Yeah, so I'm going to do that. If it only wants equity, heck with doing the T accounts for contributed capital and retained earnings, right? I only did that because I'm going to use retained earnings. What do I know, everybody? How much? I want to know expenses. What do I know?
Contributed capital.
Contributed capital at the end is 40 and it was nothing at the beginning, right? What else do I know?
Revenues 180.
Yeah. What else do I know?
Assets 130.
Okay.
5,000 dividends.
5,000 dividends.
5.
Liabilities are 80. Is that everything? What was beginning retained earnings? Nothing, right? Everybody agree? Looks like that, doesn't it? Okay. So, what can I solve for? Equity, what is it? This is 50 now. Didn't ask me for that, but I've got to get it anyway, don't I? Okay, contributed capital is 40, equity is 50. What do you think retained earnings is? 10. I got ending retained earnings as one of my answers. Okay, now what do I know?
Net income.
I know what net income is. What is net income?
15.
It's got to be 15, doesn't it? There's an answer. I don't think it asked for that, did it? Could have. But you could put the 15 up in here now, can't you? All right, everybody? That's a credit. So what was expenses? 165. You got it. Did you work this problem? Now, would it occur to you that that's exactly the same problem as number 2 when you read the problem? That's what you got to do. You got to step back and look at, what am I doing here? What do I want to do? What am I trying to solve for? Okay? What are we looking for? Okay? People say, I'm not very good at accounting sometimes because I'm not good at math. You guys, we are adding, subtracting, multiplying, and dividing with a calculator. This is not math. It is analytical thought, right? You got to do analysis. All right. Try something else. What's that? You're a little lost?
Yeah.
How could that be? This man only speaks 5 languages. I just don't know why he can't keep up in English. What the hell's wrong with him? It's his 5th language. Yeah, I'm not kidding. 5, he told me. Where are you from anyway? Never even asked.
From Africa, Gambia.
Yeah, Gambia. Africa's kind of a big place. This is what you have to do with people in the United States, right? You guys do know where Africa is, right? Does anybody know where Gambia is? Where is it?
West Africa.
West Africa. Okay, that's 50% of Africa. No, it's not. It's an area of Africa. Yeah. Do you guys know that? Good. Okay. Anybody know where Gambia really is? Yeah, isn't that awful? You knew where the United States was, right? Before you came here?
Yes.
Yeah. That's called having an education. Us. Yeah. Okay. Is it on the coast?
Yeah, on the, yeah.
Yeah, on the coast of West Africa. Yeah, I thought so, but that's really stressing in memory. Yeah, terrible. Because I'm a U.S. citizen, I'm not supposed to know that stuff. Yeah. Unless we go to war against you, then we'll know. That's all we know. Which countries we're fighting with. Okay, what do you need to know here? What did I do? I set up the accounting equation, right?
Yeah.
Assets, liabilities, equity, revenue, expense, net income. It's just a balance sheet income statement. And then we know the equity is contributed capital and retained earnings, don't we?
Yes.
And then I took the pieces of information it gave me in the problem and I wrote them all down. Okay, so let's go back a little bit here, because I bet you're not the only one. When somebody asks a question, it's usually because almost everybody's lost, and Keith just moved so fast that they couldn't possibly do it. We didn't know any of this stuff, did we? That's the stuff we did not know. Is that right, everybody? Okay, so what you want to do is you want to figure out which piece can I solve, right? Which piece can I solve here? Okay? Is this young man translating for you?
No.
No. I thought maybe you were a little bit. Yeah? No?
No.
You don't understand what I'm saying either, do you?
I was actually trying to help him out a little bit.
Oh, no, that's good. By the way, does that offend me, by the way, if you guys talk to each other? Not in the least. If you want to talk to each other about how wonderful Oregon's football team is instead of listening to me, that's cool. If you want to talk to each other about a problem you're working on, that's probably more productive use of your time. You know, that's fine. If you want to make fun of me back and forth and it keeps you entertained during class, that's cool too. Keeps your head into it a little bit and you enjoy the class a little more. I don't care how you guys use your time. Now, if you're disruptive to somebody else, right? Say, you know, you guys are talking and it's bugging you. You can just lean over and say, man, could you hold it down a little? I'm trying to hear what he's saying in case he says something, you know, new. Right? That's all right. I don't care. How do you guys learn this stuff? I don't care. So I didn't mean to say you can't talk to each other. That's nice. Yeah. Later he's going to help you, you know. Yeah, okay. It always works that way. And there's nothing like helping other people. It always comes back. Always comes back. And if it doesn't, somebody else will help you. So, okay, anyway, what can we solve first here? Can I solve either expense or net income if I only know revenue? No. Can I get contributed capital plus retained earnings to get equity? Of course not, because I don't know retained earnings. Can I calculate the net income here? No, I can't, can I? Are you with me? What can I solve? Equity up here. I can get that because there are 2 knowns and only 1 unknown. Got it? So what do I get there? That's 50, right? 130 less 80 is 50. Okay? So now what can I do? Is there something I can solve now because I have that? Now let's see. I know contributed capital plus retained earnings is equity, right? So if total equity is 50, contributed capital is 40, what must retained earnings be? 10. That's what we did. Now that I know that one, what can I do? You know, looking at everybody's faces, this is really helpful for a whole bunch of your classmates. They're glad you asked the question. Other classmates are sitting there saying, yeah, I had that figured out. Why are you wasting time? Because everybody doesn't know yet. And by the way, if you do know something, and you're with somebody else in the class and they haven't figured it out yet, what should you do being a good citizen? Show them how. Is this competition as in you're trying to do each other in? I'm not going to help you get any points because it'll screw up my grade. Nonsense. I'm grading you against 5,000 students now on a big curve. Help each other. Right? I've had that many principles. Help each other. Okay? For 30 years, 37 years. Okay, getting close to 35. Help each other. In fact, one of the things that Steve put up there was what? It's not about a competition. It's not about doing somebody else in. It's not about beating somebody. What is it about? Helping everybody. That makes you the boss. Because you're helping everybody succeed, right? Making the organization work. Do that with your classmates too. It's not some sort of cutthroat competition. We're competing against U of L, not each other, right? Or whoever, UK or you name it. I don't care if they get jobs. I want you guys to have the jobs. Right? Of course. I know you people. Okay, anyway, so if I know this is 50 and I know that gave me retained earnings is 10, what does that do for me? Beginning is nothing in retained earnings. Dividends came out of 5 and there's 10 left at the end. How much was net income? 15. Now I know that one and I can take it and plug it in up here, right? So now I only have one unknown there, right? I have 15 net income, I got 180 revenue, and what's the expense gotta be? 165. Did that do it?
Yes.
Okay. He probably wants me to talk slower. Jeez. It's only his 5th language. Maybe I gotta slow down for him. Okay, anyway, here we go. How many languages you got? 1? I don't even have that. It's better take. I got half of one itself. Right? The accounts payable account. Now this is a little different. On number 6. The accounts payable account has a beginning balance of $1,200. He bought $8,000 of inventory on credit. That would be debit inventory, increasing the account. I'll be taking pictures of it. Do you have our authorization? We want royalties. Are you taking pictures of what I put on the screen or something?
No.
That's always hilarious. Students do this all the time now when I'm using a regular room with a blackboard and my scribbles are all over and I can't even read it. Can I take a picture of that? And I can't, what the hell? Are you going to sell it? Yeah, okay. Okay, anyway. When you debit inventory because it's an asset, you have more, you bought it. And when you credit accounts payable because you borrowed more and it's a liability and you have more, this is taking us a step further, isn't it, right? Sure, that journal entry would be debit. Let's do that. That journal entry when I bought the inventory would be debit inventory, right? For 1,200. And it'd be credit accounts payable because it was on account. Isn't that what I said? Do you know? On credit. I borrowed it. I'm going to pay it later. What am I going to do when I pay it? Oh, by the way, what did that do to inventory? It's an asset and I debited it. What did it do? It increased it. That's why I debited. I have more. Why did I credit accounts payable? It's a liability. How do you increase those? With a credit. You guys know this yet? Not well, but you will soon, okay? You like this? Like me quizzing everybody before we cover anything? Didn't have a comment on that. You'd never do that with me. No. That's because you teach hard shit. I teach this easy stuff, so, you know. Yeah, it's not good. Okay, anyway. Okay, anyway, that's fun. And then it says the ending balance is 1,900. You know what would be really handy? Let's do this. Accounts payable. What's the beginning, everybody? 1,200. Whoops, I put down 1,200. Did anybody notice it wasn't 1,200? It was 8,000 we bought? Somebody corrected my error last time. That was nicer of you. I'm sorry. I read the wrong number. It was 8,000, right? That we bought. Right? Not 1,200. Okay, what did we start with though? 1,200. Would that be a debit or a credit in accounts payable? It'd be a credit. Why? It's a liability, right? You increase it with a credit, reduce it with a debit. What does this 1,200 represent? What we owed all of our vendors, right? at the beginning of the year. That's what it is. Okay, 1,200. We owed it. We put it on our balance sheet. It's 1,200. We owe. Right? It's a real liability. And then we borrowed another 8,000. Okay, so that would come in here. This is called posting. It's recording them in the general ledger. That T account represents the general ledger account. Okay? And then it says the ending balance is 1,900. Okay, so here's my beginning. Here's my purchases. And here's my ending. What's that got to be? The account went up by 700. So what's the debit got to be? 7,000 how much? 7,300. Would that do it? 1,200 plus 8,000 is 9,200. Less the 1,900 is 7,300. Is that right? Did we do it right? So what's that? Oh, it's debit accounts payable, isn't it? See that, everybody? It's debit accounts payable. When do you think you debit accounts payable? Let's see, I'm reducing the payable, right? The liability, I'm reducing it. What's the credit got to be, you guys? What do you pay your bills with? Anybody ever pay a bill in their life? I bet you have. What do they demand you give them? Cash, which is a asset, and you would have less? How do you use assets? Credit it. You credit cash. Absolutely. That's what happened here. During the period, that's what this one is. It's got to be what happened. You reduced the payable. You paid them. So what do they want to know? Oh, how much did we pay our creditors during the month? Can anybody answer that question for me? About 7,300, huh? You didn't have to write the entry. You could just do the little T account. You didn't even have to write this entry. You could just do this, just the T account, couldn't you? What I start with plus what I add to the account, less what's in at the end, must be what I took out, which of course is what I paid, right? It's accounts payable. You do that? What if I made it inventory instead? Change the problem a little bit. It's now inventory, right? We're only going through number 8, right? So we're okay. We're not doing 9 or 10. We'll do it later. Okay. Let's change it to inventory. Let's say I'm doing the inventory account, okay? So it's inventory. Let's say I gave you my beginning balance is 1,800. My ending balance is 2,400. And my cost of goods sold, that's the cost of the inventory I sold, and it is an expense account, right? It's the expense for selling, major expenses cost, is $10,000. I would like to know how much I purchased. Do it. That says purchase cost. Okay. Can you do it? Remember, this is an expense account. It's the portion of the inventory that you sold. It's the major cost of getting your revenues. What would you do? This is inventory. What kind of account is it? It's an asset. Debit or credit balance then? Inventory is an asset. Debit or credit balance, everybody? Debit. How do you increase it? Debit. How do you reduce it? Credit. The beginning balance must be a debit representing the inventory on hand that I'm going to sell to my customers. Bookstores, books, huh? Okay? Right? All that junk in Walmart. Everything in the box. Okay, well, I don't. Okay? Right, guys? Okay, so we've got beginning balance. Got the ending balance I gave you. That's what's left at the end. And I told you how much they sold. Can you tell me how much they must have bought? Write it down in the T account. Go. Only takes a second. This is really quick. Write down what you know. It's an asset. You got a beginning balance. You got an ending balance. You know how much you took out, didn't you? 10,000 is what you gave the customers. 10,000 cost to you. It's an asset. What are you going to do, everybody? Beginning inventory is a debit or credit? Debit. See the wheels spinning. Don't worry, there'll be almost no points on things like this. Again, that earlier stuff we did. Just see if you can take it one step further. Okay? What's ending? Besides, it's only 20 points out of how many? 650, you can throw away 3 quizzes? Relax, right? What's ending? What does that tell you? 2,400, right? Middle exam. What does that tell you? I bet I bought 600 more than I sold. What do you bet? Huh? I bet I put 600 more into my store, into my warehouse than I took out. It went up by 600. Is sold a debit or a credit? It's going to be debit, an expense account named cost of goods sold. That's an expense account. How do you increase expenses, everybody? Debits or credits? Expenses. Debits because they're reducing equity, right? Okay, subset equity, debits, as they go up, equity goes down. Got to get that. Do you have that solid yet? No. Will you Wednesday? It'll be better, okay? Where you get it fast, right? So you don't flounder around with that. Debit, cost of goods sold, increasing the expense. And where did the inventory come from? Or I'm sorry, where did the cost of goods sold come from? I handed them the inventory. They left with it. You know what? When you left the bookstore with your book, the bookstore didn't have it anymore. What did they have to do? Reduce their assets by the cost of the book. So inventory goes down, doesn't it? Okay, now here it is, guys. There's that cost of goods sold coming up. Can you tell me how much they must have purchased? Looks like 10,600, and we're there. That's the purchases. And that would probably be debit inventory and credit accounts payable, although it could be debit inventory and credit cash if they paid cash. Okay? We'll worry about that stuff later. All right. So, are we 7? The sale of services to customer on credit would do what? Can you guys tell me what the journal entry is to sell services on credit? What do you do when you sell services? You have done what? You earned service revenue. How do you increase all the revenue accounts? Let's see. Revenue increases equity. Equity is on the right. I increase equity with a credit, so therefore I increase revenue accounts with a credit. That's the thought process, okay? All right? So what we're going to do is we're going to credit service revenue, right, for whatever the amount is, increasing it. What do you want to debit? If they paid me, what would I debit? They gave me cash. What would I debit? Cash. I'd have more of the asset cash, wouldn't I? Right? Yeah. So I debit cash. But they're going to pay me later, so what do I have instead? It's on credit. I have an account receivable. Keep that. On open account. Is that an asset also? Yes. And how would you increase that asset? With a debit. Okay, now I realize you guys, we've been doing this for almost an hour, and you are going brain dead. You have been for an hour. You're going brain dead, aren't you? You can only concentrate this much for about 50, 60 minutes. An hour and a half class is ridiculous. We do 3.5 in executive MBA. What a joke. I'm talking to myself. Okay, we don't really, literally do 3 hours of talking. We try to break it up with some other stuff, but still, it's amazing. Way too much. What you got to do is pound on it for a while, take a break, give yourself a break, but really work when you're working on it, right? Take a break for 15 minutes and then dig back in. So take a break for 15 minutes when we're done here and then go study something, okay? Don't you have to study my class, study something else. You need a real break from this and then study this later. Okay, that'd be fine. Okay, but do it. Okay, dig back in. Do it out really hard. And then give yourself a break. Okay? All right. So what would this do? That's the entry to record it, isn't it? And I asked, what does it do to the balance sheet and the income statement, didn't I? Can you do it? I'd even set it up like this if I were you guys. I wouldn't just answer it. You can if you want, but it's really quick to do this. What kind of an account was accounts receivable? Why did we debit it? It's an asset. We have more, right? What did that do to assets? It increased it. Boy, these are easy, aren't they? Does anybody see a liability, debit accounts receivable, credit revenues? I don't see a liability. What do you bet? It's no effect, no change. What must be the case with equity? Let's see. If assets go up, liabilities don't change. What happened to equity, everybody? It went up by exactly the same amount. What do you bet? Whatever that number is in that income. It's true, isn't it? What happened to revenues if you credited revenues? It increased by exactly that amount. What happened to expenses, seeing as there's no expense in that journal entry there? Nothing, no effect. So what happened to net income if revenues went up and expenses didn't change? It increased. And what caused the increase in equity? Oh, retained earnings went up by the amount of the increase in net income. Boom. You're done. Can you work that? Not bad, is it? What would be the effect? Okay, and then another one, 8 is the same sort of problem, just with a different journal entry, huh? So let's try 8, and we'll get out of here. Okay? Indicate how borrowing cash from a bank would affect the same accounts, right? Obviously, assets, liabilities, equity, revenue, expenses. Borrow some, what did you borrow from the bank? An asset named cash. So what do you want to do with the cash? Debit or credit? It's an asset, it's on the left, you increase it with a debit. So you're going to debit it if you have more, right? Good. Okay, so in spite of your half, what does that have? You know, it's really sad. Just so my teams don't always win, seeing as Oregon doesn't lose anymore, apparently much. When I was a kid, they were awful. I tell you guys, they were going to kick them out of the Pac-10 because they were so bad. Them and Oregon State both. Yeah, we just should say that. No, Oregon State's fine. But anyway, I root for Cincinnati just so, you know. It's like rooting for the Cubs, kind of. Yeah, I like the Cubs too. They never win. Okay, I'm always for the underdog.
They're gonna win the World Series this year.
Who is?
The Cubs.
The Cubs? Yeah, why not? Let's go. Actually, they have a lot of good players this year, don't they? They'll screw it up. I promise. They'll find a way. It's tradition. Okay, anyway, so I like the Cubbies kid. I got to go. We went to see a Cubs game one time, and we didn't realize it when we got the tickets, but it was a White Sox game. The Cubs and the White Sox. Oh God, it was so much fun. It was so cool. Right around on the L with both sets of fans. Yeah, oh yeah. Then we got to see the Cubs play Cincinnati a few times.
Do what?
We got to see the Cubs play the Reds too, Cincinnati.
Yeah.
They can't even beat Cincinnati. No, anyway, okay. Yeah, I know, that's sad. Okay, indicate how borrowing money from the bank. Wouldn't it be debit cash, you guys? And what would you credit? Let's see, I borrowed money, what do I have? I have more cash, but what else do I have more of? A liability named notes payable. By the way, it's okay if you root for that awful cards, not the real cards here in town. It's okay if you root for them, even though they win all the time. You probably were born in St. Louis or something, right? Stuck with it. Oh, it's your friend's hat. You don't like them at all. You just stole a hat. Okay. Notes what, though? I wouldn't just write notes, because notes could be a whole bunch of things. Certainly notes receivable and notes payable. One would be an asset, the receivable. The payable would be a liability. So you've got to put the word payable on it. Students always ask me, how do you name things? Name it what it is. You wouldn't just say payable, because it could be rent payable or account payable or salaries payable or something. So I call it a note, because I signed a note. We used to do that, you know, pass notes in class. None of you ever did that. Now you pass emails or, no, twits. Yeah. Is that what we call them, twits? Tweets. I know. On Twitter. Okay? I never did that. I just can't imagine anybody really want to follow me. And I don't want to follow anybody else. Isn't that something you do on that? People follow each other around? Kind of spooky. Okay, but anyway, yeah. All right, call it notes payable, because that's what it is. Okay, 2 words usually will do an accounting. Usually. Okay, what does that do to assets, liabilities, equity, revenue, and expense, guys? Anyway, we used to pass notes in class. It's like that. If you write it down on paper, that's what I meant to say. Okay, so it's a note, right? We actually signed an agreement. That makes it a note. Anyway, cash is a asset, I have more. Notes payable is a liability, I have more. Does anybody see an equity in there? No, no effect. Anybody see a revenue? No, no effect. Anybody see an expense? No, no effect. So therefore, what would be the effect on net income? Nothing. How could anybody possibly miss those questions? What do you have to know? How to record the transaction. If you don't know that, you're done, right? First things first, okay? But it's just, what did you get and what did you give up? And everything is a what? There's 5 things. What are they? Assets, liabilities, equity, revenue, or expense. What you get, what you give up. That's it. Figure it out. I write down the entry and then plug it in.
Don't forget to put this on YouTube.
Oh, thank you very much. You're not actually going to watch it again, are you? Nah, don't do that. Don't do that.
Are you going to go through from 9 and 10 on and then?
No, because 9 and 10 aren't going to be on this quiz. I'm not going to get that complex. You got to really know how to do journaling.
This is it? That's all I need to know, really?
No, that's good enough. Well, Did you read the chapters? Did you do the homework, or at least a representative sample of the homework? You'll be fine with this. You're doing homework all along, you're reading all along, trying to understand, trying to comprehend whatever I'm battling about, and then you know how to do that much of it.